It's the trader tip of the week, and I'm Chris Vermeulen with today's trader tip. Now, if you've been following this market, which I'm sure you have, it's pretty much headline news of what's going on. This has been a rocky year for stocks. You look at the SP 500, it's down 16% from January 1st, first trading day, which is January 3rd, actually. And we're seeing bonds down over 20%. There is no real safe haven with the generic trades where it's a 60-40 split, bonds and equities. That is not going to cut it anymore. We are in a bear market with the bonds, and you can't just move to them as a defensive play. Now, about a week and a half ago, I was on here and I shared with you two trades that I really liked, which is UUP, which is the US dollar index. It's holding up, continues to slowly move higher. I think it's primed and ready to have a very big run. Could potentially pop and break any day, but it might also take another month or two for this momentum to kind of take a bit of a breather before UUP starts another big run. The other play I shared on here was UNG, the natural gas ETF. It popped and rallied about 15% in 3 days after that. And that play is now over. Natural gas is trying to find some stability, but there's some very great opportunities in this market for very quick, nimble traders. But the main point of this kind of trader tip this week is more about what the markets are doing, what you should be aware of, because this big volatility naturally makes you want to get in there and trade. Big moves means big opportunities, but the market is very dynamic. It is great at pulling money out of your pockets or out of your accounts. And volatility generally hurts you more than it does any good. And the chart over my shoulder, you can see here, that's a weekly chart of the SP 500. It has been in a strong uptrend for quite a while. But about 2 months ago, it flipped red. And really, we've been able to dodge this bullet, this sell-off in this market, and really sit in cash and protect our capital. And that's something that a lot of investors need to do. If this is the start of a bear market that could take another 6, 8, 12 months, potentially even last out a couple of years, then cash is going to be one of your best friends. It's not something anyone really likes to do or who haven't embraced it yet. But once you embrace a cash position, you start to realize these market declines really don't do anything for you, other than they're going to give you an opportunity to put your money to work later and buy more shares of your favorite companies or move into your favorite commodity, whatever it will be at that point. So that is what I'm trying to share here. It's all about protecting your capital, being very defensive here. Just because there's volatility, you should not be getting in there and trading like a madman. If you've been losing money this year, you can just see this whole year has been a high volatility year. If you've been losing money, then you don't have a strategy for this fast moving market. You don't want to be touching it. Just step aside, let the market collapse, and find an opportunity when it does turn around to take advantage of this. And that's what I do with the Technical Traders newsletters, our investing newsletter here, long-term kind of passive strategies. We can avoid bear markets, get back in on a new bull market. Super simple, very low time requirements for that. And then we've got different strategies so we can play these sell-offs and these rallies within the indexes in sectors in a much more aggressive way and be able to pull money out of the market regularly. So it's all about understanding how the markets move. And if you don't have a grasp firm on short-term trading or bear market trading, because bear market price action, believe it or not, is quite a bit different than a bull market. And it's traded a lot differently. You need a different strategy. The timing, everything is off compared to what you've been used to in a bull market. So just be really aware. This is not a time to get fancy and try to put on a lot of trades. It's a time to actually step back, cut back on your trading, protect your capital, and wait for some good opportunities. Either let us provide you with opportunities or wait for the market to turn around and show some strength going forward. So hopefully that gives you a little bit of insight and helps you going forward. Anyways, take care. I'm Chris Vermeulen from the technicaltraders.com, and that's your trader tip.